What is up, investors? Back again today. Going to do another little real estate video. If you're here for the real estate videos, expect them about once per week. We'll focus on different markets and kind of the general United States market each week. And so today we're going to take a look at San Francisco. This is a city I live about 100 miles away from. So I do know this area, and it's an area that I travel frequently to and have done some work there as well. So now, what is causing the real estate crisis that is looming in San Francisco? And I believe primarily it's this work from home. Obviously, we know with the health situation that caused a lot of businesses and corporations and these large tech companies in particular in San Francisco to decide to allow a lot of their workers start working from home. Take a look at what CEO Mark Zuckerberg of Facebook said. When you limit hiring to people who either live in a small number of big cities or are willing to move there, that cuts out a lot of people who live in different communities, different backgrounds, or may have different perspective. And I actually think, I don't agree with everything this guy says, but I actually really agree with this. And I think for a site like Facebook, that might actually be a great strategy to start hiring people from different backgrounds, different perspectives. And I think these companies are actually going to find over the next couple months to maybe even 6 to 12 months, they're actually really going to benefit from this work from home thing. Take a look at Jack Dorsey, who's the CEO of Twitter and Square. We want employees to be able to work where they feel most creative and productive. So they're actually been a little bit more aggressive than other tech companies, is they're allowing you to potentially work from home for the rest of your employment there at Twitter and Square. Now, I feel many employers are going to find that workers are as productive or often even more productive in a work from home environment because they're not commuting. They can work maybe on and off. They can work late at night. You know, you're just not confined to the office hours that you're there. You're not worried about what's going on at home. You're not worried about your commute home as well. So I think this is likely going to be a more permanent shift from work from home. Now, what is it going to do to the real estate values in San Francisco? And I'll talk more broadly in a minute about what's going to go on throughout most of California as well. So San Francisco, really interesting. Rents were down 11.8% last month. In May, there was a 9% decline. So we had a 9% decline in May and then an 11.8% decline in June. This is one bedroom apartments according to the website Zumper. Now, Zumper has been tracking rent prices across the country for over 5 years, but we have never, I repeat, never seen the market fluctuate quite like this, says Zumper co-founder and CEO Mr. Athemos Gregoriades. For example, rent prices in San Francisco have historically only gone up and typically only incrementally. Yet now we are seeing double-digit percent rent reductions. This is unprecedented for this generation of renters. And so this comes from CNBC, courtesy of Zumper. So they are never seen rents. And I have been living in California my whole life, again, about an hour from San Francisco. And I have never, ever seen this. Maybe back in the .com, maybe the late 2000s, you saw a lot of commercial real estate and rents and values of homes, fluctuated a little bit there. But this is so sudden and so drastic that I don't think anybody had predicted this. Now, you might say, well, that's for all of California. That's not true. Other parts of California are actually seeing rents rise. Sacramento, which is quite a ways away. It's the state capital here in California, if you're not familiar. It's in the same region as San Francisco, but it is quite a ways away. Rents are up 5% there. Now, Richmond, much closer to San Francisco, probably considered a suburb of San Francisco. Rents are up 11% there. So I think we're seeing people move out of San Francisco, which is the most expensive place to rent an apartment in the whole country, at I saw stats over $3,000 for an apartment, and you're seeing those workers go to more affordable areas like Richmond, maybe Sacramento, but definitely like Oakland, Tracy, Livermore, Dublin. There's lots of things here. Now, what are the impacts? for landlords and the real estate market in general. I think you're going to have reduced cash flow for landlords and investors. That's obvious. They're giving concessions. You see free months and free, lots of like concessions that landlords are making. Less demand for commercial property. Because think about this. So less people are renting in San Francisco. People are fleeing the city for a number of different reasons, but primarily because now they're allowed to work from home. There's going to be less demand for the pizza shop, for the dry cleaners, for whatever businesses that are also surrounding these apartments, and increased demand for the adjacent areas. So if you think I'm predicting a complete meltdown of prices here, I actually don't think that's going to be the case. I think parts of California, and if you live in other parts like New York and maybe Chicago and Miami, and there's other parts of the country that are facing this same situation that San Francisco is, although San Francisco is very unique because they have so much tech company employment, and those are allowing their workers to work from home, and they can work from home. So now, monthly market report for San Francisco County. This was back in June 2020. We saw existing single family residence home sales. This was down 8.9%. So sales are down in the region. The price ticked up a little bit. When you're looking at a $1.8 million median price tag, to me, that tells me if you want to live in San Francisco, you have the money and you have the desire to live there. 1.8 million is a lot of money. Obviously, it takes a tremendous amount of income and probably a down payment as well to qualify for this kind of price for this type of home. So the person that is shopping for the $1.8 million median home, and obviously they go up much higher than that in San Francisco, that's a person that obviously wants to live in San Francisco for whatever reason. And there's lots of reasons to live there. But we see here that existing home sales are actually down 8.9% from the year before. Now, in San Francisco, even more interesting, active listings here, we have 328. That is up 63.2% year over year. So we're seeing home sales are declining, and we are actually seeing active listings increasing. So what is that showing me? There's a decrease in demand, increase in supply. You only have to take economics 101 once to understand what that's going to lead to. That's going to lead to lower prices. Now, we have 23.8% pricings that have reduced prices and a 19 days median on market. Now, I wanted to compare you again to Sacramento, another, I would call a major city here in California, but not nearly as robust in terms of the employment opportunities that San Francisco has. We do see a drop here in existing home sales, 2.4%. Again, some of this is due because real estate agents can't show properties. It might be difficult to get a loan during these times. It's obviously difficult to go house shopping during the times we're in. But what we will see here is active listings are actually way down in Sacramento. Take a look, down 41% in Sacramento. Again, I just showed you in San Francisco, the active listings are up 63%. So supply is up 63%. And supply is down by quite a bit, 41% in Sacramento. So that is why I think you're seeing prices rise in San Francisco. Actually, Sacramento, a little bit more, 6.9%. And I think that trend will continue. Now, here's probably the most interesting graph of this whole presentation here is take a look at where we were at. Inventory of homes listed for sale in San Francisco. Take a look where we're at right now. Where are we close to? Back in 08, 09, 10, when prices of homes absolutely collapsed, really across the country, but particularly in San Francisco as well. So we're seeing inventory increase. Demand is drying up very quickly in San Francisco. I think that is going to lead to rapid decline in San Francisco real estate prices. Now, finally, conclusions. I think suburbs near major cities like San Francisco, and you can translate this to New York or Miami or parts of Texas and Chicago and probably Seattle as well. I think you're going to see high demand for both apartments and housing outside the area, probably as far as several hours away, because if you're only required to come into work once a week, twice a week, you might even be able to afford to fly a private jet in based on what you're going to save housing. I mean, it is ridiculous how expensive cities like San Francisco are. I think you're going to see a decline in rents, and that is going to be a precursor to falling property values, both on the rental side and, more importantly, homes listed for sale as well. So that is going to create a lot of havoc. Businesses are going to be forced to close, both because of the health situation that we have going on and because of a decline in population as well. So businesses are going to be closing, and that is really going to impact the area as well. It also might not make it as attractive to live in a big city like San Francisco when all the really trendy and hip and fun nightlife places are closed because they had to go out of business. Now, what you're also going to expect is a rapid increase in property and sales tax in these large cities as these leaders, the mayors and the governors and stuff like that, they're going to have to grapple with these lower rents, lower property values, and business closures. They're going to have to try to keep the schools going. They're going to have to try to keep the fire department and the police department and all the city services up and running based on property values and a population level that just simply isn't there anymore. So as you see these property taxes and these sales taxes rise in certain areas, I think that's going to drive people out even more. So there's my conclusion for you. San Francisco, in my opinion, is absolutely going to be one of the epicenters of the work from home and real estate crisis that we're going to see over the next, I would say, next 12 to 24 months. I think things will keep getting kicked down the road. Housing market is not like the stock market, which we cover very in depth here on the channel, in that the stock market moves every day and it's relatively transparent. The housing market's going to move much more slowly. And as we work through these evictions, work through these business closings, work through personal bankruptcies, work through people starting to work from home and migrate out of the city, these prices are going to adjust. But I did show you they are adjusting now very, very rapidly from a 9% decline in May, and now we're at 11% down in June. I would expect another decline again in July. There just simply is not going to be the demand to move into a city like San Francisco, as nice as it is. I'm not trying to hate on San Francisco right now. So hopefully you guys enjoyed this video. Again, if you're here for my real estate videos, I will be back again once a week or so with a real estate video. We'll cover different markets. We'll cover the housing markets across the United States and in general, as I am really working on trying to make this a large part of my portfolio over the next year or two. I've really done a lot of research and I'm ready. I've got the financing, I've got the down payment, and now I'm just sitting on the sidelines being patient, watching these prices start declining. And so it's exciting, and I'll be back to report to you all of my journey into the real estate business. If you'd hit that subscribe button, I'd appreciate it. Maybe that like button as well. Feel free to leave me a comment below. I love hearing from you guys, either whether you agree or disagree with me. I love to hear from you. Thanks for tuning in. Good luck with all your investments.